not all things are equal. Tech heavy has been really what's driving these markets. And I have a slide here showing that the S&P 500, for one, is everybody talks about, it's the 500 largest stocks, and it's a good, measurement of the economy and the markets and everybody's, benchmark, if you will.
We normally kick it off with just what the market's done and kind of roll into it. So, Kyle, you want to give us a little details on the market?
Yeah, I think we're all pretty surprised, right? Looking through the indexes this year and how the market's performed. I think most of our predictions were that it was going to be a sideways or flat first half of the year and maybe some back end rally here. So, a little quick update. The S&P 500 is up roughly around 15% for the year, coming through the middle here of August, and we'll talk about it here in a second. That's really driven by a handful of stocks, but Dow's up about 6%. And the NASDAQ, which is the tech heavy, which has really been driving these markets since the AI talk started earlier this year, is up close to 30%. Our bonds are flat for the year, but I guess that's a win compared to last year. So we'll take it. And yields are definitely higher too. And commodities are down about 5% for the year. But to kind of put that in perspective a little bit, as we get caught up on the 6-8 months of this year so far. But if we expand that to just even 12 months, the Dow the S&P is up only about 4% instead of 15. So a lot of that's been driven the last 6-8 months of this year. And kind of things I want to highlight is not all things are equal. Tech heavy has been really what's driving these markets. And I have a slide here showing that the S&P 500, for one, is everybody talks about, it's the 500 largest stocks, and it's a good, measurement of the economy and the markets and everybody's, benchmark, if you will. But if we look at this slide here, it's showing that there's 7 stocks: NVIDIA, Facebook or Meta, Tesla, Amazon, Apple, Microsoft, Google. Those are the ones that are driving the returns. And so those are the 7 stocks out of 500 that are responsible for roughly 70% of the entire return in the S&P this year. And all those are being driven a lot by the push and the talk of artificial intelligence, or AI, that started a handful of months ago. And we kind of did a little other slide here on those 7 stocks, if we actually just pulled them out of the S&P 500 and what that looks like for people. And so what you see here on this red line is the performance of those 7 stocks cumulative. They're up roughly 58% through the end of June. You look at the S&P, like I said, up around 15%. But if you look at the S&P, that blue line without those 7 stocks, so the remaining 493 stocks, it's roughly 4%. And so that's just the crazy thing, is that you see these indexes that are up so high, yet it's really just 7 stocks that are actually about 23% of the weighting the entire S&P 500 index. And so, yeah, markets are up, but it's really driven by a handful of stocks in an area there. So